Hey Ian, how are you?
Hey, great. How are you?
Ready for another edition of the Ian Cast?
Of course, always.
And we are doing this early on Thursday when I was just checking the stock market and woo,
Yeah,
it's down, Ian.
spooky. Yeah, I
Yeah,
know.
people are being spooked again. And you and I, we can tell the difference between what happened in March and now.
Right. Yeah, for sure.
Right. I mean, it seems to be like, I think essentially the NASDAQ, the Dow, and I'm just literally looking right now. Okay, so then I'm just looking in NASDAQ negative 2%, S&P 500 1.84, Dow 1.54. And the
Yeah,
key to it all is the stock that I get trolled on, haven't been trolled on recently since it came off,
right.
and that's been on our America 2.0 blacklist for some time. And full disclosure, I have been wrong on this stock, Ian, for
Yeah,
4 years. And there are some number of folks that have been very vociferous in letting me know. And
of
that
course.
stock begins with an A. And really, let's start our discussion with the stock market with that
Yeah.
A stock.
Yeah, so of course we're talking about Apple, the stock, the company that reached, was by far the first to $2 trillion total value. And it exceeded that by a decent amount too. And now, like you said, it's coming off the past, I think, week and a half. It's come down, like 400 or 500 billion dollars of value has been shed from that company. And that is an insane amount of money. Like that is money now that's being, it's sitting on the sidelines now, and it's going to want to go back in to somewhere, and it's most likely not going to go back into Apple. They made their profits already. I mean, that stock went up like crazy over the past month or so. They're not going to buy right back into that. They're not probably not going to buy into like old world companies like oil, banks, stuff like that. So what we're thinking, mostly is that that money is going to come in and actually fund the America 2.0 companies, essentially. So be a net positive that Apple, it's like a win-win because you'd be right about Apple, if it keeps going down, and the America 2.0 companies are being funded by that money.
Yeah, it is so weird, Ian, as an old Apple fanboy of their devices. I've never. The stock is obviously a totally different story. To see Apple in this position of kind of being like what's the thing in Star Wars? Death Star, Dark Star.
Yeah, the Death Star.
Yeah,
Yeah,
Death Star. Like we have noticed that when Apple is rising, it actually sucks liquidity,
yeah,
cash from all the companies that are actually innovating,
right.
actually growing, actually facilitating, creating, fomenting, whatever the right word is, the America 2.0 revolution. And when Apple's rising, those stocks generally get no bid, get no liquidity, get no funding. And so there's a nearly like an inverse correlation. And we'll put up this chart. Okay, let's put up this chart of the S&P 500, which is a kind of Apple proxy in a way,
Yeah,
because it's such a big weight there. With the S&P equal weighted, and you'll see there's two lines. The green line is the equal weighted version of the S&P 500. In other words, it's equal amounts into every single stock. So obviously, smaller stocks get an equal amount of weight as Apple. The S&P 500, whereas a company has a larger stock market value or market capitalization, it gets a bigger weight. And you can see that it was in about like late June, early July. The S&P 500 equal weighted version peaks out, in our judgment, temporarily, and then the Apple show begins.
yep. Essentially, yeah. I mean, the Apple had like a 7-8% share of the S&P 500 because it was worth so much more than any other company. So when you level out the playing field, Apple's weight of the index goes from 8% to like 0.2%. You can see that like the real buying was in the smaller companies, and then all that money that was being put into the smaller companies, as those started to level out and even go down a little bit in most cases, that money was then put into like the big like Goliaths, like Apple, Microsoft, Google, Amazon, which I think those four are like, at the peak were like 25% of the S&P 500, the market cap weighted index, where the more valuable the company is, the bigger share of the index it has. So that, that kind of transition from the smaller companies being bought to Apple and the other big companies being bought is really clear in this chart.
Yeah, and going back to the issue of Apple versus America 2.0, Apple really has all the qualities of America 1.0. Ian, we laid out in the Blacklist. It borrows money. It uses its cash to buy back stock. It has a weakening business. They are losing market share and have been losing market share for many, many years now. Take away price increases and take away this, in my judgment, this somewhat bogus business of services, because minus iPhone sales, there is no service business. So if the iPhone sales were to go into decline and they are losing market share, the services business will go into decline as well. There are no independent customers for their services business.
Yeah, it's like we're turning into a services business, but in order to get our services, you have to buy our hardware products.
Right, so, the business itself. I remember a Steve Jobs video a long time ago when Apple stock was pre-split. It probably was trading for pennies on the dollar, and they asked him about Apple stock, and he was on stage somewhere, and he said, "You know what? Forget about the stock. If we do the right things by the company, the stock will take care of itself." Today, we have come 180, Ian. Today, they take care of the stock, and then I wonder who's taking care of the company.
Yeah, they are, because they buy the stock. That's pretty much
it. And going back to your original point, which is that for many companies, a loss in market cap, to the extent that the company is growing, it can simply mean an inflection point. In other words, there are moments when people get excited and they bid a stock up, people come in, there's a wave of buying. Once that wave of buying is exhausted, now sellers dominate that stock, the price sees a retracement. However, with Apple, there is a big difference, which is that it is the company itself that bid the stock higher.
Exactly.
And in other words, as it's losing market cap, that loss is actually real to the company itself.
Yeah, because they own so much of the stock, right?
Right.
They have all this cash, they're putting that into the stock, and then they're borrowing money when they don't need any more money. And what they're doing with their current money is putting it into the stock. It's crazy.
It's completely insane. And obviously, I have been wrong about the stock. However, the business itself has been in decline and is in decline for some period of time. Losing market share is always bad. Falling behind on innovation, which is the essence of Apple, is terrible for their long-term value. And then from our perspective, it's also been transparent that as some of post that announcement split is when really there was that parabolic move in Apple.
Right.
Yeah, and they announced that 4-for-1 split, and then all this excitement got going. People who are generally somewhat inexperienced believe that there is a something for nothing trade. In other words, you're going to get more shares when they split at the original price, and we try to make it clear on Tesla, which we're still positive on. We'll discuss at the end of this. There is no free lunch. There's no something for nothing. In other words, the prices adjust. And with Apple, there were so many people that believed that. They went and bought in thinking that post-split, there was going to be a second parabolic move.
Right.
Yeah,
exactly. And, that's never really the way it is, but that's always, the expectation is that when you buy before this big thing happens, then after the big thing, you're going to be able to sell for a huge profit. But the problem is everybody else is buying for the same reason you are. And then when there's no huge, spike afterwards, everybody's like, oh, well, and they just sell. And most of them end up taking a loss.
That's right. And in this case, it's also going to cause the S&P 500, the NASDAQ 100 all to decline. And to the extent that some number of people run algorithmic strategies to keep, the Dow and the NASDAQ and the S&P 500, it's going to bring some of the stocks down. And you can say that from about March 23rd, March 24th was the bottom of the crash. And the recent peak was what, Ian, like a couple of weeks ago?
Yeah, it was. I think it was actually like 2 days after the split. So it's September 2nd. Yeah, last week.
September 2nd. So between a huge 5-month kind of recovery, the biggest stock in every index, incenting a kind of, people to kind of go all in mistake. And also the fact that year end is now at this point only 3-something months away.
Right. So there's a lot of things coming up. It's we're getting into the end of the year. At the end of this month, we're going to have quarterly rebalancing, and we just had the splits. So there's a lot going on. But overall, all that money that's being freed up from Apple, and the stocks going down with it, Microsoft and Google. That's hundreds and hundreds of billions of dollars that are being freed up and that are going to be put somewhere else. And really, there's nowhere else to put them but the stock market, in particularly the U.S. stock market, because most others are still not keeping up. So, I mean, the America 2.0 companies are looking really good right now as a target for a lot of that money to go into.
Right, 100%. We talked about this in the investment meeting, which is right. Just the loss in market cap in Apple could easily fund many the stocks of many America 2.0 companies, and we believe that that is actually going to unfold as the year goes on, which is that many people will sell out of Apple, and as you mentioned earlier, in all likelihood never come back, being that Apple lacks actual growth. Apple, given that their primary activity at this point is buying back stock, they're in a weakening scenario. Samsung has introduced the Galaxy Fold. Microsoft has introduced its folding phone called the Duo. This market is now bifurcating to where there's so many people coming to attack their business from so many different points of view. Yeah. It's likely that their phone sales are likely to, the next launch is likely to be less successful than the previous one.
Yeah, I mean, that's going to be the pattern, I think. And yeah, for sure, Apple, outside of America, they don't really have much of a business at all. So, everywhere else in the world you look, and it's some other company dominating phone sales. So it's really not looking good for them.
Right. And to bring this to point, it's like, yes, we were talking about Apple. However, the reason to talk about it is that Apple stock is now a funding source for our companies in terms of stock buying. So many people can be like, Paul, you're talking about Apple, the whole market's going to go on. No, we actually see it as a positive. People inflated their stock. As people sell it, it's a net loss for Apple, the company. However, in our judgment, we believe it's a net gain for America 2.0 stocks because people actually want to own growth. People want to own innovation. And I believe they want to be in America 2.0. So that money, I believe, is going to flood back into the market. And I saw something today, which I put up as well in our Slack channel, talking about, according to the Investment Company Institute, that they believe, let me just check the number. They believe that the amount of cash on the sidelines is $4.49 trillion.
Wow.
$4.49 trillion that's sitting there. And there's going to be more as people sell out of, whether it be Apple or Microsoft or any of these mega cap companies that have often been bid up for no other reason other than the fact that they are in the S&P 500 or NASDAQ.
Right. And again, it's like, where are you going to put that money other than growth? I mean, we haven't had a period where every single industry is being disrupted, for a really, really long time. It's literally a once in a lifetime opportunity to buy into companies like this at this point. So, yeah, I mean, I would bet a lot that money, most of it goes into these America 2.0 companies. And hundreds of billions of dollars, I mean, that could fund hundreds of companies.
Right. I saw an Elon Musk video. This is from a few years ago, and they were talking about why he chose to take all his winnings from PayPal and fund essentially two companies that were considered to be no hopers. In other words, they asked him, it's like, well, what did you think that your likelihood of Tesla being successful? I believe he said something like 5 to 10%.
Wow.
And then, and he said, and they also asked him, what did you think the likelihood was of SpaceX being successful? and he thought that SpaceX was unlikely to be successful.
Yeah.
And then they asked him, so, well, why would you then fund it? And he said, well, there are ideas that are important to be funded. And to
Yeah.
the extent that the innovation works out, that the goal of the company is something that is worthwhile, that helps us as a race, as a society, as a country, then the stock market will come to see the value in it and come to allocate value in it. Now, I sense that even in terms of how people view what should be valuable, there is also an America 1.0 and America 2.0 version. The old one was purely based on just dollars and cents, accounting, number counting. And today we have a sense that a company's purpose matters.
Yeah, for sure. I mean, that's why, everybody's always saying the price to earnings is too high and everything. It's like, well, you've never really seen a time like this in the stock market unfold. And if there was before, I'm sure you'd be saying the same thing. It's a whole different type of, situation unfolding than we've seen before, where companies are just growing basically just to grow rather than growing for a reason to invent this entire new ecosystem.
Right. I mean, in Tesla, their long-term goals are never defined in terms of economics. Their long-term goal is to accelerate the development of sustainable mobility. I may be getting the actual words wrong, and also sustainable energy, to move that transition over so that we are no longer using carbon for our transportation needs, and then also for our energy needs. So its goals are set in non-monetary terms.
Right.
Although obviously, as you can see by the stock price, where Tesla is now, I mean, even with whatever it's come off, it's still a $400 billion company.
Yeah, exactly. And I mean, if you apply the split back to last May, it would have been like a $40 stock.
Right. I mean, just to make it clear, we're this is all very inside finance things. We are still bullish, optimistic, positive about America 2.0 stocks.
Right.
And we believe that this fracture, this divide between America 1.0 and America 2.0 is only going to get bigger as this unfolds. And it does seem like, I believe, if we look out 6 months, 1 year from now, that Apple's split will have been a marker when, like, sort of the I don't know, there's been a baton that's been passed, I think, from Apple to Tesla, America 1.0 to America 2.0.
Yeah, that makes total sense to me.
And then this relates to something you brought up, which is an area we talk about, which is crypto, Bitcoin, that whole area. And you were in a Slack channel, you're talking about how much money is in the current banking sector, or was the finance sector?
Yeah. Well, it's the whole global banking industry, and it's $90 trillion, which is like an unfathomable amount of money. I think it's twice the entire value of the US stock market or something crazy like that. Yeah, I mean, so yeah, crypto has its work cut out for it. Basically an infinite amount of disruption that they can pull off here.
Yeah, $90 trillion in the existing financial system, which is expensive, is often corrupt, lacks utility for a large segment of the population that is locked out from using it because their barriers to entry are so high. It's inconvenient, it's high fee, and there's so much innovation, so much good use, so much social good in truth that can come from actively disrupting that world.
Yeah, for sure. Yeah, making everything, decentralized, transparent. That's the entire thing that everybody wants. So it's only a matter of time, really, before crypto really starts to noticeably disrupt that, and it becomes way more well-known.
In the meantime, there's been a kind of mini crash. Would you say that? Mini crash in?
Yeah, I would say so. I mean, stuff was down, 40 something percent, 50% over the matter of like a week, which is like not too much of a shock. And I hope that if you're in crypto, you didn't sell, because that's kind of normal to just kind of last through these kind of periods. But yeah, I mean, it's a very good time to buy for sure. I would say it's Bitcoin is down around, I think, a little over 10,000. And it hasn't closed below 10,000 yet, like on a daily basis, but it's dipped below it a couple times. But really, nothing's changed. I mean, Bitcoin, I'm continuing to see, and I've tweeted about this a couple times, the shortage that we're seeing from exchanges. Since February, I think 200,000 new Bitcoin have been mined. but over 300,000 have been taken off exchanges. So that's a net like wipe out of 500,000 Bitcoin that are basically being just held now, for the long term.
Right, and there's fewer and fewer Bitcoin available, and the nature of markets is that rising prices are the best publicity and best sort of reason that people are likely to come into the stock market. That's true whether it's Apple, whether it's true for Bitcoin. It's the same thing. And so Bitcoin went from, I think, with the Ian cast, I remember saying that Bitcoin was at 11,200. It bottomed out I believe, at 9,800 on this crash. So that was a 28% move.
Yeah.
Yeah, and many of those DeFi coins that we've kind of hinted at that are been in this massive bull market. I mean, some of these things have gone up several 1,000% in the last 3 months.
Right. Yeah, I know. It's ridiculous. It's the first, I think, wave, back in 2017, everything shot up, but it was like, what is this? Everybody just wanted to get on the newest thing. Now it's like, this is actually a usable thing with DeFi. So there's actually purpose behind it. There's utility there, and people are actually seeing where crypto is going to go in these really early stages. So it's kind of like, the internet in probably the late 80s, because then people at least, knew what it was in the early 90s too.
Yeah, I mean, to me, it's a bit like blockchain is like its own internet. It obviously could never exist without the internet. However, it's its own thing. And then there's an entire array of businesses that are being built on the blockchain, which are represented by these coins. Like many of these are coins and businesses simultaneously.
Yeah, exactly. But, and they're fully, transparent, which is a lot of things. A big thing of why people don't like big businesses, because they can get away with stuff because they're not transparent. All of this is totally transparent, decentralized. So it's everything that, people want in an investment. They want to invest in something ethical. So that's going to drive, a lot of attention towards blockchain too, because I mean, if you can't really get away with too much sketchy stuff if you're doing a blockchain project.
Right, right. I mean, this new financial world, many people, and even we originally thought that it would simply come to replace the old one, and that will happen. However, the way that's going to happen now is becoming increasingly clear. In other words, DeFi coins, crypto are creating a whole new separate world.
Right.
A whole new separate world with its own new things, new ways of doing things. We had somebody, I realized that I think our last discussion on crypto probably left some people behind. And we had someone ask if Compound was FDIC insured. And that made me understand that these two worlds are really very, very different. And the old banking world, the old insurance world, the old financial world is America 1.0. Crypto is America 2.0. And we have some of it through grayscale trackers in the Profits Unlimited portfolio to try and benefit from the development of it, because this is really in baby step number one. I mean, this is barely even the first, I don't know, not even the first out in the first inning.
Yeah, exactly. That's why I kind of, I said it was kind of like the internet in like the late 80s, because it's like we kind of have an idea of what is going to be now that there's like legitimate, projects developing. But it's still really hard to say. Like this is very, very, very basic to what is going to be, in 5 or 10 years.
Right, and we've tried to make it in Profits Unlimited to be very simple in the sense that there's no way that crypto continues along the path that we believe is going to, without Bitcoin's price rising exponentially. Tell folks what your prediction is. You said all your friends are tired of listening. Go ahead and announce it to the world. And, I'll tell us what, I guess is semi-official what we've laid out in terms of that. Go ahead.
Yeah, so we've been saying Bitcoin 50,000 this year, which is still possible. But I'm saying now by next August, 115,000. And I'm very, very confident in that, just because of the huge demand that we're seeing already. The fact that hardly anybody owns Bitcoin. I think, less than 1% of the world's population owns Bitcoin. And, there's already a shortage developing on exchanges there's half the amount of Bitcoin being mined. And you see companies like Grayscale buying more Bitcoin than is being mined. So the supply literally can't keep up with the demand. People are buying it on exchanges and transferring it off of the exchange into like some kind of other cold storage mechanism, which is a lot more private, very, very low chance of being hacked. But and that suggests that they're not going to sell it anytime soon, because in order to sell it, it's kind of a pain. You got to get it back to the exchange, sell it from there. So the supply being cut, the demand only getting stronger. I think the next year is going to be a pretty wild ride for Bitcoin.
And many folks may have very little familiarity with crypto. However, crypto can be stored in something like this. This is something called Ledger.
Right.
In other words, it's protected, it's cryptographically protected. And that's where you would store a digital asset. You could take this, just put it in your pocket and go anywhere. Theoretically, this can contain really, as much information or really all of your crypto assets. Probably a poor idea from a security perspective to do that.
Yeah.
But nonetheless, you could walk around with pretty much your entire net worth if you wanted in this.
And even better, though, is that if you lose it or if it gets stolen, and now it sounds like an advertisement for Ledger, but I'm just saying, because this makes it sound even better. If it gets stolen or you lose it, you still have, what matters when you own crypto is the private keys of your address. So all that matters is you have those keys somewhere. It's a random string of numbers and letters, and you can access it. You don't need the device. So that's what I was going to say.
It's like, it's like to get into your house, you need your key, and that gives you access to everything that's in your house. And as long as the lock protects your house, you're fine. Nonetheless, we are bullish, optimistic, positive on crypto as I hesitate to call it an asset class, Ian.
Yeah.
It's almost like an asset class suggests it's very much part of the old world when it's clearly something, its own thing, quite new, developing in its own way, creating its own solutions, its own platforms, its own ways of doing business.
Yeah.
They're very separate from the old financial world.
Yeah, it's kind of like a different transition that we went through from, the internet to like apps on a phone, because those are still the internet. So this is kind of like that type of thing, but it's on a completely different system.
Right. It's on some kind of a blockchain network, and where, again, there is transparency, there's access. It is also very cheap to do things, and which is why we believe that as the years go by, just like online shopping at one point in time was a novelty, people used to be afraid to put their credit card numbers in. Now, no one even thinks about buying anything online, and that's the way we believe things will unfold. And at some point in time, I had thought that, it'll just be a digital version of a mortgage or a lease. However, it's becoming clear with these DeFi coins that the actual structure of it is going to be something that's quite unique, something new, and probably way cooler, way more efficient, way cheaper than anything that exists in the America 1.0 world.
Yeah, for sure.
Yeah.
It's pretty unbelievable. Yeah.
Okay, and just to lay out, we think Bitcoin will go to 50K this year. I know people say, Paul, that's not realistic. However, no one would have imagined that Tesla could go from, what was it at the beginning of this year, 200 to 2,000. Nobody would have imagined that.
Yeah. I know, exactly. Yeah, things can change very fast. And yeah, that's about it.
Things can change. So let's go into Tesla a little bit, since we've covered the stock market. We've covered Bitcoin, crypto, part of a regular runners. So post-split, the stock has dropped off about 25%, something in that range.
Right. Yeah. So, which was kind of expected. And we talked about it, how, it was kind of the buy the rumor, sell the news thing, just like Apple. Except one of the big differences between Tesla and Apple that we've been talking about is that while Apple is using its cash to buy shares of its stock, Tesla is actually selling shares of its stock.
Yeah, and they sold 5 billion shares pretty much at somewhere near the top. And I was actually shocked to see that somebody actually got this right and said, hey, some analysts wrote, I don't know if you saw this comment, say, hey, so they sold $5 billion for the stock, which allows them to fund some number of gigafactories. I forget what the cost estimate is per gigafactory. Right. It might be $300 or $400 million.
Yeah.
something like
Yeah.
that, which then facilitates the production of the Semi, the Cybertruck, Model Y, obviously additional units of the Model 3, and also all their additional other businesses. In other words, it's completely sensible what they have done versus what Apple's doing. In other words, they're buying back the stock at levels where really they should have nothing to do with it. Tesla is like, hey, okay, you're going to price us into the future at this rate. Well, we are going to take that money and actually plow it back into a innovation growth opportunity business that still has unlimited potential from here to, I don't know, 5, 10, 15 years, 20 years maybe.
Oh yeah, for sure. I mean, they've only really mass produced one car at this point. And like they just started with their solar roofs. They built a few really big battery systems, but yeah, they're, just scratching the surface of what they're going to do going forward.
If you see, they are rolling out the Powerwall. In fact, with the new software upgrade to the Tesla, they have integrated Powerwall with your car so that you
Yeah,
can now actually feed the energy from your Powerwall into your car if the power is off. So they're starting to build integration between their products,
right.
which no one else can do. Not a
Yeah,
car company, not another battery company, not another solar. So now you're beginning to see the elements that we've always told you that makes Tesla such a unique and valuable company. There's all these different elements working together.
right. And they all fit together perfectly. And it's just it's really cool to actually watching it like unfold in real time. And with the Powerball with the solar roof too, those are going to feed off of each other. And then they've got automation with their cars that they've already developed really well, and they continue to do that. So from here, it's just like they're going to be mass producing several more cars in the near future, and they're continuing to grow that solar roof business, which is going to be a big hit because I think only around 1% of households in America even have solar. So as the prices keep going down, and I think the solar roof is actually one of the cheapest models in the market, that's going to be a super popular product because more and more people are going solar for home.
And if I hadn't actually put old-fashioned solar on my house just last year and bought a battery from someone other than Tesla, because at that point in time, Powerwall was a very, very limited distribution, I would definitely be signing up for all of it because now it integrates everything, your source of energy, your storage of energy, your personal mobility, and then you can actually use that energy for any purpose that you want, whether it be to live in your house and for all your various needs that are there, or for personal transportation. And then there's the last element, which people find the most, uh, I guess, unbelievable. Most people doubt that robo-taxi business that Elon has been hinting at, talking about for some time.
Right. And that's going to be a big thing too, because I mean, not just for convenience, because robo taxis, you can get a ride anywhere at any time. But if you have a Tesla, you'll be able to rent it out essentially. So you can be sitting at home and you'll be making money from taxi fares from your car, which is something that nobody's ever been able to do. And it's pretty awesome.
Yeah, and then it sort of destroys the capability of owning any other car
Yeah.
that sits there in your driveway
Right.
doing nothing for the vast majority of the time. In other words, if you can create a robo-taxi business, now the economic value of your personal transportation is like, it's like kind of having a house that you also Airbnb when you're no
Yeah.
longer there, when you're no longer using it. So we are still bullish, optimistic, positive on Tesla. Now, understand, as Ian said, most splits, especially of stocks that are very well known and that a lot of people are following, tend to be buy on the rumor. People think that no one else is aware of what they are aware that the stock is splitting. They think
Right.
everyone else is going to come after to buy it. And unless everyone is like you, they also anticipated, which is why we say stock markets anticipate. There's probably going to be some selling as people take some gains for year end, post split. Some people who bought at the high, who just went in for a quick in and out, are also going to sell. However, once that pressure is done, there's still enough at Tesla, I believe, for this stock to go up substantially from here.
Yeah, 100% agreed. And not only that, but Tesla used to be kind of met with a lot of skepticism because whenever they set a deadline, it ended up getting pushed back 2 or 3 times. Now it's coming forward 2 or 3 times every single time with everything. It's getting done ahead of schedule. So what's being priced in the future, I don't think is taking into effect that, it might even happen sooner. So we could see all this develop a lot sooner than expected.
As in the words of the immortal Elon Musk, well, he's still immortal. He says, "I'm sometimes late, but I always deliver."
Exactly.
Okay, so last thing, cannabis. A couple of things that came up. Let me just bring up this article here. I'm always post this in there that I saw, which is the Congressional Committee, Ian, approves a marijuana bill. Let's put this headline up. That allows research on dispensary cannabis. In other words, people forget that there's actually 2 sources of demand for cannabis. One is from a medical basis, where the cannabis does need to have a certain purity level, does need to meet certain standards, and then there's casual use. And most people are highly focused on casual use because it seems like that would be a super growth market. Like, in other words, if you just turn that on today, people would go. However, there are 2 markets, and there is both a growing and real case for use of cannabis in medicine.
Yeah, I mean, there's only a couple, medications that even have cannabis in them that I can think of are even approved on the open market. So, as medical research continues and as biotech companies can do more clinical trials using cannabis products as medication or treatment, every single time something goes right, every time that a new drug gets approved by the FDA or, something else international, there's going to be like a huge, supply or demand jump. It's going to be a whole shift in demand for marijuana. So, right now, medical marijuana is nothing compared to the potential, and it could really grow a lot from here. Depending on how well it works at treating, it's being tested for like everything. So even if it works for just a couple things, it could be a huge boost of demand for marijuana in general.
And for sure, even, some of the casual use in some ways is a little bit like self-medication for sure during these lockdowns and things like that. So many people are going through issues of whether it be depression, loneliness, anxiety, panic, all these things. And many people, I believe, are using cannabis actually to save all these issues.
Yeah, exactly. Yeah, that is a huge thing right now for sure.
Right. So also we noticed that some of the cannabis stocks, even on a down day in the markets, were up. Afria was up. Canopy growth is up today. And what we were telling you last week was that we believe that this is a important part of America 2.0 in the sense that obviously this is a large market that there's the casual use market. There's the conversion from illegal to legal that's there. Then there's the consumerization. In other words, as cannabis will be, I believe, in the next minimum 1 to 3 years, become federally legal. The consumer brands will start to, like sort of alcohol. At one point, there was just generic alcohol.
Yeah, exactly.
And now you have all kinds of, that's all there in front of it. In other words, it's a massive growth market, incredible market that's ahead. You just have to go through these painful development moments to get the benefit.
Yeah, and I mean, with something everybody knows about marijuana. So, when the hype cycle went around in 2017 and 2018, I mean, the companies just like shot up parabolically. And, it's taken a long time to settle down, but this is absolutely temporary. So with all these kind of factors developing and bubbling up and finally coming to fruition over the past few months that we've seen in cannabis, I mean, the next couple of years are going to be huge.
Right. And once you go through that shift, the demand and supply imbalance in the stock is so in favor of demand that these stocks can be rocket ships for years and years and years. You just have to go through this moment and sit through it, which can be hard, requires some patience. All right, Ian, we've run long on this Ian cast talking about the market and everything else. Just to make clear, we are still bullish, optimistic, positive on America 2.0 stocks. Bitcoin, crypto in general, Tesla, and cannabis. And with that, let's end this one. Ian, you go first. I will wave goodbye next.
All right, everybody. Happy Friday. Have a great weekend. Thank you so much for watching and stay safe.
And this is Paul saying Bye.